Well, hello everybody, and welcome to another edition of Hawk's Scan Sentry Report. I am Hawk Arps, Vice President of Jan Arps Traders Toolbox, and this is the Scan Sentry Report for the week beginning September the 9th, 2013. Hey, I want to congratulate those of you that took advantage of the great thank you special we offered after last week's blog. Many of you took advantage of 15% off of anything in the toolbox, so I'm glad you got some good new tools to work with. And we also had some comments last week. Somebody said, "You're doing a great job, Hawk, but I would love to see something new and different." So, this week I'd like to start off by showing you something new that we developed. We do some custom programming in TradeStation, NinjaTrader, and eSignal, and a customer asked us this week for a moving average pullback indicator that will just identify the first or second moving average pullback after a confirmed moving average trend. So I'm going to show you something new and see if it can find any decent tradable opportunities for us, and then we'll analyze the futures markets that we commonly analyze, gold and crude, and maybe the American indexes. So let's get right to it. Let's show you something new and exciting. So our client, who shall remain nameless, wanted a tool that would identify the first pullbacks after a trend is confirmed by moving averages. And so we designed this tool to identify a pullback to the slow moving average as well as to the fast moving average. Now I have the typical 200 moving average in white, 50 period moving average in orange, and a 20 period average in red. And so you can see it identifies all of the pullbacks to the slow moving averages and the first pullbacks to the fast moving averages, thereby enabling a quick entry as soon as the trend is confirmed using the typical moving average trend confirmation. So the nice thing about this is we can now apply this type of show me tool to our radar and include it in our Scan Sentry report. You can see we've created a radar screen tool that, like all of our radar screen tools, shows us how many bars ago a certain signal occurred and what the percent change since that signal has been. Even get some warnings. Let's see if we have any warnings here. There's one, EWU. And then also included slope, because I've realized that when looking at pullbacks to a moving average, if the slope of the moving average is relatively horizontal, it's not as likely to be a successful pullback. So the slopes that are less than 9 I highlight in yellow, so I won't even worry about those. I've gone further to include this TTB radar screen pullback indicator in a scan that I made. I call it the new moving average pullback, and you can see here I created a scan that looks for all the stocks right here, all the stocks, and I'm looking for anything that is $5 or more with an average volume of 400,000, and I'm looking for any moving average pullback signal less than 5 bars ago. So in the last 4 bars, looking for this. I ran this and I came up with these 123 different symbols, which I included in my radar screen here. So let's see if we can find something recent. These zeros mean that the signal happened on the most recent bar, and I have them color coded so that a pullback to the fast moving average is light green and a pullback to the slow moving average is dark green. A bearish pullback to the slow moving average is red, and a bearish pullback to the fast moving average is this pink color. So you can see we have a few bullish. Let's look at the slope now and see. As I said, those with the higher slope have a better chance. So let's look at COL, and we can see now that it has identified a pullback to the slow moving average. It identified the first confirmed pullbacks to the fast moving average and the slow moving average. But now that the fast line has crossed the slow line a couple times, we have another signal, and this time it's a pullback to the slow moving average. So it looks like this has already gone pretty far. It's not definitely not the first pullback in the trend, but this looks like it might not be a bad signal. We have increasing radar 2 and what I would consider a pullback divergence in radar 1. You can see we have lower lows in the oscillator while we have higher lows in the price. Let's take a look at some of the American indexes and see how we can orient ourselves towards the markets in the near future. As I have said throughout much of the rally that we've experienced this past year, the Russell has been leading the S&P in my opinion. And so I'm going to look at the Russell here first, the futures contract for the Russell. And what I'm seeing is throughout this move up, we are not seeing any lack of buying in the radar 1 fear greed indicator. In fact, as it made these highs, we got a little bit of a divergence here at the peak, but the overall thrust, there's your divergence that synchronized with the trend exhaustion 3, gave us a really good warning that it was going to drop at that point. However, this overall block of buying shows that there's still some interest in buying these markets. When you look at this pullback, I don't see a lot of selling. In fact, I do see a pullback divergence right here where lower lows in the oscillator, and higher lows in the price. So this leads me to believe that we do have more upside potential in the Russell. However, let it be known that in the shorter term, you can see that the triple trender here has synchronized bearish, and the radar 3 trend strength is bearish down here, you can see. So they're both bearish at this point in time, and we've gotten the first pullback into the triple trender. So that's kind of a typical bearish sell signal. We do have pretty strong support right here at 1005, so it's going to take a lot to get through there. We do see a pullback 23 brewing down here. So I guess my overall analysis is that there is more upside in the long term to this market, but it has the potential to go down in the near term. Let's take a look at the S&P, see if we can get any clues from that. Looking at the S&P daily, it's got the same situation. Radar 3 down here is bearish, and triple trender is bearish. We've pulled back into it. Significant buying in the last thrust. So it's going to take a look at a shorter term chart to see what we might expect for the upcoming week. And here we see the 50,000 share chart, and there is a significant selling in this little sell-off here from the radar 1. That selling was supported at this 1652 level. We did get a nice little divergence here at this at the peak, right there. But as far as this peak relative to that peak, it looks like I still see more buying. So what I would expect to see is a move to the upside, a potential divergence in radar 1 somewhere around here, where perhaps the price tests the highs at 1662, but we get lower radar 1 readings somewhere in here. Then maybe we'll see this move continue down. Otherwise, if it breaks through, you can follow this move to the upside. Let's take a quick gander at the gold market. I'm happy to see that the trend is now officially up. You can see all three triple trenders are bullish, and we're getting the first pullback into the synchronized triple trenders. We have convincingly bullish radar 3 trend strength down here, and in fact I'm looking for a nice cross of the fast over the slow line here in the radar 2 to confirm the next entry for a move to the upside. This move could keep coming down to this uptrend line right here, even though we have support at 1362, somewhere around here. I would expect to see a bounce off of this uptrend line and a continued move to the upside. Let's see if there's a shorter term chart that can give us any insight. Drilling down to the 4181 share gold chart, we do see that since gold made its big move here when they started rattling the sabers of war, we've since then been more or less in a holding pattern ranging between 1392 and 1381. We saw quite a lot of significant selling down here at the bottom, so I don't really see an exhaustion of that selling. There is a bullish divergence here just before this move to the upside, but I think that had more to do with news than market sentiment at the time. So once you look at the most recent day or so, the buying and selling is more or less even. I don't see the bulls nor the bears really taking control, having a lot of enthusiasm. And in fact, if you look at the radar 2 as well, it's just kind of hovering right at the zero line. It's neither accelerating nor decelerating. So this is a market to play the edges. You can scalp this range until we see some significant buying or selling one way or the other. Looking at a daily graph of the oil markets, we see that crude oil is currently in an uptrend. Radar 3 trend strength is bullish, albeit currently it's weak bullish here with the pink histogram bars pointing up. Triple trender up here is bullish, so we have to assume that the path of least resistance at this point is up. There is still more buying than selling, as indicated by the Radar 1 Fear Greed. However, if we do roll over at this point in time, then we will be looking at a pretty significant pivot divergence and considering the idea that the market could change direction on us. So we have general bullish orientation. Let's drill down, see what the intraday chart looks like today. Here we have the 6,500 share bar of crude oil, and it is showing us a little bit different story here. We did recently get a trend exhaustion 3 right up here at the top of this move, so we could see a potential short-term reversal back down maybe to the 108, what is this, 108.70 level. However, I'm not convinced it's going to be a long-term reversal. Like you notice, when we were at this previous price range before, as indicated by this support and resistance line, we didn't have nearly so much buying as we're seeing at this point in time. However, we do see a little bit of a waning in the buying in the last few bars, so I wouldn't be surprised to see it come down, as I said, maybe down into the 108.70 range. We are seeing divergences down here in radar 2, price leader right there, so that would confirm the short-term bearish orientation for the beginning of the week. However, triple trender is completely bullish right here, although this bar looks like it was testing that, and radar 3 trend strength is bullish, radar 1 Fear Greed is bullish. This is still a bullish market. We just see a potential pullback in it in the short term. Thank you for taking some of your very precious time to enjoy the Sentry report with us again. As always, I want to remind you that Arps Trader's Toolbox is not licensed to make buying and selling recommendations. All of the examples shown today are for purely educational purposes. However, we are licensed to create some of the best technical analysis tools in the world. So with the help of some of these tools, our wish is that you're able to trade successfully. And as always, may the trend be with you.